Shingirai here again with another update on portfolio performance over the past week. In the last week of September, it was quite difficult to find places to hide, as only 5 out of our 30 positions returning positive returns, and that would see a week where 10 out of 10 of our CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 3 down 0.86% to CBAM 4 V2 rather down 67 basis points. We did see some recovery after a sell-off on a quarter-to-date basis from an LNG thematic equity position rather, and Allianz European equity up 0.58% plus on the 1-week basis, and also that reward that we get from the shorter duration exposure on our MAN GLG high yield opportunities coming in handy on a relatively risk-off week for both bond and equity markets. In terms of detractors from performance, after a relatively strong quarter year-to-date performance, we did see some headwinds there from Japanese equity positions as investors really began to mull that higher for longer interest rate environment and potential interest rate hikes coming from the BOJ, in line with other developed markets who have been increasing their interest rates, base rates rather, throughout the course of the year as well to combat inflation. We also saw some weakness there for HSBC FTSE 250, down 1.65%, despite some improvement, markedly so, in UK GDP and also business investment. In terms of quarter-to-date performance, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns basically flat for CBAM 1, down to CBAM 5, down about 1% on the quarter-to-date basis. Although markedly here, we begin to see that risk-off environment again being highlighted by that strong performance of dollar versus sterling, and that would see dollar strengthening 4.16% on a quarter-to-date basis. But then again, speaking of that shorter duration protection, this was consistent across our SPDR US high yield bond position and our LNG short-dated bond position, both up more than 3.7% on a quarter-to-date basis. And then you did see that strength in commodity prices really supporting the FTSE 100, which is up about 3% as well quarter-to-date. Headwinds continue to persist in Europe, as obviously ECB remaining one of the main central banks also continuing on their path of interest rate hikes, and also our interest rate sensitive positions across the thematic and JP Morgan positions down more than 4.6% on a quarter-to-date basis. But coming into the fresh week, we have seen some interesting macro data, with Japan in particular recording an increase in industrial capex and also manufacturing PMIs and outlook, both beating expectations. China, of course, offline for the week as they celebrate their National Day. But then we also saw US and UK manufacturing PMI data still below the 50 mark, despite the sort of improvement compared to the previous month. Job opportunities are, as reflected by the JOLTS, increasing through this week with a stronger reading. Crude stocks for API down in the US, and also looking at $84 a barrel for crude this week as well. And then we saw US services PMI slightly weaker, down to 50.1 reading as well. As you all know, we've come to the end of the third quarter for the year, so as usual, you would be seeing in the coming week or so, you'll be seeing the performance monitor note that we send out to clients on a monthly basis. And also in the next 2 weeks, we will be hosting our quarterly webinar where we'll be able to field any questions with regards to portfolio positioning and potential outlook for CBAM.